Amazon expected to report earnings after the bell today. So what are the most important points that investors should be looking out for? Well, joining us now to talk about that is Gene Munster. He's Senior Research Analyst at Piper Jaffray. Gene, thanks for joining us. Now, you've said that Amazon is a top pick for 2015. Why is that?
We believe there's two key things going on. First is that they're in a pole position for a secular growth theme on e-commerce. Everyone knows that, but I think that sometimes that important top-line revenue opportunity gets lost because the second big issue, which really overwhelms investor thinking on this, which is profitability. They have spent like drunken sailors in 2014, and that has really impacted the belief that this story actually has margin leverage. And I think that what is going to happen in 2015 is we'll see some fractional improvements in margins, and I think those fractional improvements are going to be encouraging to investors and positive for the stock in 2015.
And just to dig into margins a little bit more, I mean, you mentioned spending like drunken sailors, and certainly we've seen the stock take a hit over the last 12 months. It's down about 20% because of that, and what we've seen with that in previous earning reports. But you're expecting Amazon to issue a margin outlook below street estimates.
Right, that's for this quarter and for next quarter. And I think the important part is that how that progresses throughout the year. That's our opinion, is now is a great time to own it because everyone is anticipating that margin below where the street's at. So they always guide below the street. You have to look at what the ranges are. It gets a little bit complicated, but I think that it's safe to say is that investors are expecting that, and we don't see downside to the stock based on that. What I think is important is that as 2015 rolls out, they have leverage in their fulfillment centers. They've overbuilt some of the capacity. And the second, this sounds crazy, but they've been putting more robots to work in those fulfillment centers. They've gone from about 1,000 a year ago to about 15,000 today. And they have the productivity of about 4 people. And so things like that have fundamental long-term impacts on their margin, which we think the shares will be rewarded for.
So given that fact, how should investors view all of Amazon's spending?
We think they should view 3/4 of it as positive. All the stuff that they're doing on e-commerce and AWS, their online cloud computing, all that's positive. The stuff that's a little bit more skeptical is some of the hardware things they've done around the Fire Phone, for example, or some of the media. So in general, I think that 3/4 of the spending is in good hands, and so for me, that's a good bet.
Great. Well, Gene Munster, thanks for joining us. Thank you for watching. I'm Morgan Brennan. Have a great day.